session, we have the price of Bitcoin basically giving us the entry. We had the market giving the exit one right after sending the idea 1 minute after, then pulled back, giving opportunities for the rest of you that were not able to get in, and now melting hopefully to the exit too, to basically close the idea full volume on that level. Yo, what is good, family? Hope y'all are having an amazing day. As you saw on the introduction of the video, we had a beautiful bearish idea that we're gonna break down in this video. So we have an amazing week so far. Let's break this down. Today's setup was a little bit more complex, so let's go over it. First of all, let's replay back to 2 p.m. so you guys see exactly what I saw on the beginning of the New York session, so I can tell you exactly the levels I was looking at. Basically, we have all of this consolidation, but the first question I always ask myself is, where am I coming from? And basically, we have a low, lower high, lower low, lower high, lower low. All right, we have this bearish impulse giving us the directional bias. Internally, we have this low, lower high, and lower low. FYI, the same candle makes the low and then the high, because on a bullish candle, first the low is made and then the high. Same thing right here. All right, first the low is made, then the high. High, low, lower high, lower low. Now, we have this bullish break-off structure. Price breaks the last lower high, although it's internal, it's a BOS. And after that, internally, in this bullish impulse that makes this BOS, we can also mark up internal ranges. Low, high, higher low, higher high. Again, same candle. Why? On a bearish candle, first makes the high and then the low. So we have low, high, higher low, higher high. BOS, significant range, but now internally we have another range that makes this bearish BOS. So now we have high, low, lower high, lower low. Now internally in this bearish range we have high, low, lower high, lower low. You can see that in some cases like this scenario in today's New York session, market creates a lot of generic and internal structures, and that's completely normal. You have to deal with it, and as long as you know where to mark up the highs and the lows, as I'm doing right now, you will be good to go. All right, you don't have to worry about anything else in reality. And basically we have this bullish BOS that eventually creates a bigger expansion. Can seem like this high is higher than this high. Perhaps yes, perhaps no. The only solution we have for that is to really know the high of the candle. Let's zoom in. On the right, you will see the exact high of that candle, which is 62.90. This candle is 62.90. So we understand that these are equal highs. What does this mean is that, yeah, price makes this internal structure BOS, makes this generic internal structure BOS, but at the end of the day, it's not breaking the higher high. Therefore, now we only have this. All right, it's like we had this bearish structure, which is this. Then market went all the way to the upside to break this internal structure, which is this. And then price broke to the downside, internally did a lower high, okay, and now market made all of this bullish range, taking these two but not taking this one. So at the end of the day, what do we see here? This is very simple. We have still just one low relevant break of a structure. All right, there we go. Relevant bullish range, market doing a significant internal BOS to potentially keep going higher. That's what I see in this drawing. All right, so that's in short terms what we have here. Now I'm only breaking this down so you guys get used to that, but I didn't do all of this when I was doing my live analysis. What I was doing was, all right, what is my last high? Is this one. So now that we are coming up for the open of the session, what do I have? I have this bullish range. We have this high, this last high, and this last low. Now, what is going on right here? This is the most important part. Right here, market is just, going lower, nothing interesting, but then goes up, higher low, higher high. This is the most important part of this setup. Why? Because we have low, high, bearish candle, then bullish candle, breaks previous candle's low. You see this little wick, and then goes to make the high. We go to the 1 minute, we can see the price exactly makes first the low and then the high. All right, but it doesn't really matter now. In the M5, we clearly see bullish candle, first makes the low, then the high, and then rejects. Fantastic. So what we have here now, in addition to our beautiful drawing, is this. Okay, market now goes lower and does this. This is literally that pullback inside of our bullish range, and then goes up, creating 1 and 2 impulses. 1 and 2. So let's forget for a second this madness of candles, and let's just focus on this. If you are on the open of the New York session right here, you mark up your last high and your last low. This high is a higher high, therefore you will be looking for a rule of the third impulse to the upside. This low is a higher low, which is basically a bearish break of a structure. So now this pullback is literally where we are. I missed it. Perfect. Now you have two positions: bullish rule of the third or bearish BOS. This is literally all you have. In this case, we had this as our last significant high and this as our significant low. And basically, obviously, as you saw in the intro, the bullish idea didn't go active. And let's see, bearish candle activates the idea right at the open of the session. Let's go over the 1 minute. All right, the 1 minute activated the entry right here exactly. Boom, there we go. Went a little bit lower and then pulled back, and then eventually melted towards the exit. So this trade was very fast. All right, this was like 6 minutes of setup. Super small also. Invalidation was super tight, 70 pips, 71 rounding to the upside, 71 pips invalidation. Sometimes you will have this as scenarios where market is just ranging and you just have to get the entry wherever market has the last high and last low without really caring about where we are coming from, which is the first question you have to make yourself. But then at the time of the entry, after understanding what price is doing, you just have to see where is my last high and where is my last low without caring if that's big enough or not, because that's subjectivity. We want objectivity. We want zero discretion. We want systematization of the strategy. And that's what we have with this. Where's my last high? Where's my last low? Buy a stop, sell a stop. One goes active, cancels the other. We stick to it. With this being said, family, remember that in the description of the video, you have the link to my Instagram. You can ask information about the private group of students that got this idea live this morning. All right, if you're not able to jump into the live sessions, you have an app with all the parameters every single time we send the idea. With this being said, family, you can ask information about it. Let's see if we have spots for you at the time of you sending the message. And yeah, with that being said, family, see you all. Let's get it.